Slightly higher for all the key indices. The Nifty is up close to about 20 points. Sensex has gained about 100 odd points. Banks are leading the charge. So the Bank Nifty has picked up pace. So when we started the show, it was up 200 points. Now it's higher by about 270 points. In the frontline pack, it's ICICI Bank, which is pushing the Bank Nifty higher. But even in the mid-cap PSU banking space, you've got an Oriental Bank of Commerce as well as Canara Bank, which are looking quite good. So OBC is rallying close to about 1.5%. Keep your eye on DLF. That's at the high point of the day, rallying smartly up close to about 3.5%. And India Cement, a south-based cement player, so that too is moving quite smartly. On the flip side, as our team is alerting, HUL is at the low point of the day ahead of numbers. In fact, the entire FMCG basket is a tad bit subdued. But let's move on and talk about the banking space itself. In his first television interaction since taking charge of Axis Bank, CEO Amitabh Chaudhary tells CNBC-TV18 that a potential acquisition of insurance company Max Life by the bank is currently facing regulatory constraints.
So first, I think all of us have to appreciate that we can only move forward provided we have support of our regulator. Yeah. And RBI's views on what equity stake they might allow in insurance have kind of changed over a period of time. And in the last couple of years, I think they're quite clear that they don't want the banks to be taking large stakes in insurance. And they have not permitted any bank taking that kind of stake. They're also talking about this non-operating financial holding company as a concept. And then they're saying that once that is done, then, that company can then go and take a stake in insurance because then at least the depositors are protected. So first is that we are constrained or guided by what the regulator is willing to allow us. So that is a big constraint. Now, assuming RBI was to allow us, which I don't see at this moment, but assuming they would allow us, we are a very large distributor. And if the right
the largest for Max.
The largest for Max, but generally a large distributor. And if the right kind of opportunity was to come along, we'll definitely look at it. The right opportunity has to come along. It hasn't come along as yet. And RBI is not favorably disposed towards allowing us larger stakes. So I think it's more a hypothetical question as we speak.
But to, comply with RBI's rules, are you looking at forming this non-operative holding company structure, segregate the businesses and then reapply?
So RBI has to come out with guidelines because there are some tax implications also involved. So I think the Finance Ministry along with RBI is looking at it. I don't know how much time it will take. We have to wait. It is not an easy decision for the Finance Ministry or RBI to take. So what we hear informally is that they're working on it.
So you pin it down to regulatory hurdles right now for your acquisition of Max Life?
We have never said that we are acquiring Max Life. I think it's all speculation on people's part. Yes, logically people have, because we have a large partnership with them and because we have had that partnership and a very good partnership for a long period of time, it's a logical kind of extension which people have done.
And you in your previous avatar have also evaluated that company thoroughly.
I admire Max Life as a company. I think the fact that they're a good company and that's the only reason we want to acquire them is not necessarily true. But yes, we know them. They're a great partner for us. We value them. But acquisition is only possible if firstly the regulator dispensation changes, and secondly deal structure can be created, and at that time obviously from a board and a corporate governance perspective we have to look at all possible deals on the table. That can't be the only deal you look at. If the right deal at the right price comes along, it could be Max, it could be someone else, we'll look at it at that point in time. We are in no hurry to jump into it because we have to jump into it.
Well, and you can catch the full interview this evening at 5:30 p.m. only on CNBC-TV18. All right, quick focus on the markets. Then the Nifty is holding around that 11,750 odd. But just to pull up a couple of data points, today we hit a high of around 11,770 approximately. From there, we saw a bit of a U-turn. So I think that number should come up for you. That's the intraday high, closer towards that 11,770. If you're looking at the options data, the 11,800 call, that is fairly active in today's trading session. It started the day with a premium of around 40 rupees. Now it's moved to around 45 rupees. So safe to say, the bears believe if they're eating into this premium, that's you do 11,800 plus 50 rupees. At 11,850, that's the recent high. They can defend that mark. That's at least the thinking as of now. But if we're looking at on the flip side, the 11,700 put as well, that's fairly active. The premium out there was around 48 rupees at the start of the trading session. That's come down to around 41. So if someone is writing that particular strike, then the stop loss comes in closer towards 11,650 approximately. Keep in mind the 20 DMA just a couple of trading sessions ago, we hit that mark and we bounced off there. currently as well, if you're looking at that data point of around 11,700, then, the bulls will believe that they can defend that mark on the downside. So 11,650 to around 11,800, that's at least what the options data is suggesting as of now. If they're writing both the strikes, then it'll be 11,800 plus 80 rupees. That'll be around 11,880. And the downside, 11,620. So that's a bit of a 200, 250 point range that it seems is at play as we speak. But let's tell you how to trade the Nifty from here. Prakash Kaba and Rajat Bose, both of them are with us on this Friday afternoon. Prakash, coming across to you first, what would the trade be on the Nifty? We're holding closer towards 11,750. And also give us a sense about the Nifty Bank, because that clearly is playing a good innings in today's trading session, supporting the bulls.
Exactly. It's the Nifty Bank that has an effect on Nifty. Had it not been the case, perhaps we would have been Nifty flat or perhaps negative. So far, I would say that it's trading at the upper end of the range. Upper end of the range was 11,872, closer to that, 792. That's the place to book profit. And stay out. Today being a Friday, enjoy the weekend and come back next week, because the market is not going up in a hurry. It could trade sideways or be sluggish, but it's not going up in a hurry. So take the money off the table and enjoy your weekend.
Okay.
And what are you recommending in terms of picks?
Two stocks. One is the Fed Bank. I think I like Fed Bank. Looks like Fed Bank is looking good, Federal Bank. And the way it's trading, looks like we can see a move to around 100 zones. Stop below 95 should be fine. For that, I think a day or two is needed. And I also like among the metals, the Steel Authority of India. And looks like Steel Authority of India is going up for a target of around 59. 58, 50, 59 zones, stop below 56 should be fine. It's a reluctant up move, but so far it is.
Okay, all right. Let's go across to Rajat. Then, Rajat, how would you trade the Nifty? And also, you could fill us in with your picks.
I would say that the Nifty it came to about 11,750 and tried to move up again, but could not sustain there, currently at 11,745. So my feeling is that it is unlikely to cross that critical level of 11,792 in today's session, even though the bank Nifty seems to be rallying pretty well. So Nifty might actually fall, but unless it stays below 11,745 for at least some more minutes, I don't think one should take a short position. And even if you take a short position, I don't think that it will fall below 11,700 to about 11,680 kind of support area, because the overall activity today, as I see, is very choppy, not much movement. So here you won't get much of a movement, and so there is no point taking a trade in the index. Bank Nifty, the movement is already through, because two major banks which have posted an all-time high today, HDFC Bank and Kotak Bank. Kotak Bank 1430 and HDFC Bank 2370. These are key resistance levels in my reckoning. So unless they sustain above that, there would not be much movement. ICICI Bank would not be able to pull the Nifty another 50 points from here on, because you need the participation of HDFC and HDFC Bank. So there are no trades as far as index is concerned, but I have two trades. Indigo, I would put a stop loss below 1572. I am revising my stop loss. It was earlier I gave 82, but 1607 and 1615 are the two targets. And Hero MotoCorp May futures, 2580 is my stop loss. 2632 and 2640 are the two targets for Hero MotoCorp May futures.
Rajat, do you want to give us some disclosures?
I do not have any positions either in the indices or any of the stocks and the future that I have discussed.
And Prakash, Okay. Thank you, gentlemen, for joining in. Let's talk about SIS Limited. Now, that stock is higher in trade on the back of a good set of Q4 numbers. But bear in mind, in the last 1 year, if you can pull up a one-year chart, you can see that SIS was under pressure and it's lost close to about 35% of its market value. For this quarter in particular, revenues went up 22%, while profits have practically doubled. Rituraj Sinha, the group MD of the company, joins us on the phone line. Ritu, afternoon, and thanks so much for speaking with us. You ended FY19 with a top-line growth of about 22%. What are you hoping to achieve in FY20 by way of revenues and margins?
Hi, Rima. I think, it's been a landmark year for SIS, with a 22% result, growth number. And, going forward, we maintain our broad outlook of roughly 20% growth year-on-year basis with 20 to 25%, ROCE and a 50% OCF to EBITDA number. So that's what we're working with, and we see that 19-20 should play out broadly in the same bracket.
All right, Rituraj, we take that point and your numbers look quite good. So congratulations for particularly the fourth quarter. But, I wanted a couple of details. I was looking through at your presentation and you say that Q4 run rate makes you all the largest security company in India. I remember a year ago, G4S, that was the market leader with a market share of around 4.5% to around 5%. You can correct me if I'm wrong. But at that point of time, I think SIS had a market share of around 3.5% in India. So now with this statement, you're confirming that you're in the lead. If yes, what is your market share currently in India?
So I could confirm that as of March this year, our monthly revenues are greater than that of G4S, which makes us the market leader. And if the same trend continues for the full year results of 19-20, we will overtake G4S, which has been the market leader in India for 28 years. So that's a major milestone. And I think market position is particularly important in the service industry because market position has direct bearing on pricing power.
Right.
So we believe that in the years to come, this could be a very significant development in the SIS trajectory to emerge as the largest security services operator in the country.
Largest would be, market share would be around 5%, 4.5%?
Yeah, I think talking about market share, we estimate that our market share would be neck and neck with G4S around 4%.
Okay.
But I think the more important thing that I want to highlight for the viewers is that, going forward, when you compare the Indian security market with that of Australia, UK, US, you will find that the market leaders in all these three major markets have greater than 18% market share.
Right.
So the development of SIS, the vision is to, build out SIS going forward, not just as the number one company, but also develop pricing power, and with that, hopefully, a market share which is more in sync with the larger markets that I mentioned, which could be a 8-10% market share or greater over time.
Okay, so the aim is to improve the market share from the current 4% to about 8 to 10%. Ritu, the other heartening bit this time has been the improvement in your margins. Consistently, there has been an improvement in the margins. What is leading to that? And now that you are gaining more scale, do you expect margins to improve? And what could be the target on the margins?
Well, we've always maintained that, the margin blip in the earlier quarters of this year was due to various factors that have been enumerated in the past. But if you look at the Q4 situation, it's more representative of where the steady state of the business lies. For example, if you look at the India security business, for Q4, it's roughly 6.3%. And we believe that that's the broad range in which India security will continue to perform. If you look at our international security businesses, they are ahead of 5%. And again, we believe that over time, the international security business will move up from a 4.5% full year margin profile to a 5% plus margin profile.
Okay.
The facility management business has again moved, on a year-on-year basis, FY19 facility management stands at 6.7%. If you look at the quarter, it's almost 7%. But we believe that facility management will be around the 6.5-7% mark going forward. So all put together, if you look at our Q4 margin profile, the normalized EBITDA is around about 5.9%. And that's broadly in line with what we had communicated to the market, that, on a full year basis, there might be some quarter-to-quarter change because these businesses are very rapidly growing, which also means that if you have a one-off event like a large contract, like a Cognizant that disrupted some numbers in one quarter and had a carry-forward impact in the following as well. Barring those aberrations, our margin outlook will remain more or less in the same range as we have demonstrated in Q4.
Yeah, all right. Rituraj, if you look at it, your facilities management, you were doing around 180 crores on a quarterly basis. Now you're doing nearly around 270 crores, and that's the better margin business. So that could help your blended margins going ahead. Final question before we let you go. What exactly is the cash in your books currently? Are you still looking at some acquisitions for the coming year?
Well, I must say that SIS has made 5 acquisitions, but, our growth has not been, inorganic dependent. Majority of our growth comes from organic development. However, we maintain cash in the books at all time for consolidation play for strategic reasons. But I would like to inform all the viewers that the net debt to EBITDA for SIS stands at 1.1 as of right now. And, if you look at OCF to EBITDA, our operating cash flow is 50%. OCF to EBITDA stands at 50%. So we're maintaining adequate cash should attractive strategic opportunities emerge in the coming year. We are well geared to top that up. And obviously, because we are funding these acquisitions largely through, low-cost debt that we are able to leverage off our offshore balance sheet in Australia. It also has an accretive impact on the overall ROE profile.
Okay. Thank you, Rituraj, for joining in. Let's get in the early rates from the European market. The big headline from there is that SocGen's first quarter profits have dived 26% amid choppy market conditions. So that has come as a bit of a disappointment in individual stocks. But the early rates are absolutely flat in the European indices. I guess they will await for the non-farm payroll report, which will come out of the US markets later in the evening. So flat for now. Get into a break on the other side.